Good evening, everyone. Time for another silver update. As you can see by the 4-hour chart, we had a fairly significant rally today. I actually think that the rally today is probably not related to the fundamentals of the silver market, probably more to the national debt debate. And I'm going to get to that issue in a bit, but I just wanted to point out some technicals. First of all, we're butting up against the thrice tested, now for the fourth time tested, trend line on this short-term flag, and we're approaching a critical point here. You can see we've broken to the positive on the MACD. So my guess is we're going to penetrate this line to the upside, but we haven't. We hit it, we turned back down. So we have to wait and see, but my guess is there's about an 80% chance we do turn around and penetrate this line, and then we're looking at a series of support lines, or actually, I'm sorry, a series of resistance lines that we have to pass through, and they're going to be right about here. So if we can rally, pass through these lines, then we probably will be off to the races, especially if we can surpass this line right here. And then we'll probably end up forming some kind of a cup formation. Again, that may take a long time. It may be out to the fall, but it could be a cup formation that would ultimately result in a swing roll move, which would be, we're going to call that 150, and we're going to call this 133. So actually probably closer, we'll call it 32. So that's an $18 move. That gives us a price target of 68 on the swing roll. The other technical things I want to look at are the volume. Now, if you remember in past updates, I've referred to this volume. And this is obviously an outlier amount of volume, and it corresponded to the down move. But remember, for every seller there's a buyer, and the point I've been making is that if the average price where this volume came in is superseded to the downside, then this becomes down pressure volume. On the other hand, if we don't penetrate the average price where this volume was made, and that's somewhere in these lows here, so we're in an iffy spot, if we turn around and rise from here, such as this, then this actually becomes support volume. This becomes upside buying volume. So we're at a very critical point, and depending on what we do from here, this could be a bottom type situation, or it could be a follow through, and you would expect to see larger selling coming in. The volume is still decreasing, it's still trending down, so we're looking for some kind of resolution to come fairly soon. Now, I wanted to address some issues that some comments that people had made about the last video that I made. And the first concern I want to address is what I said about eBay, and I specifically gave as an example some of the Tigers that I'd purchased and what they were going for. A lot of people came and commented about the commissions and percentages and spreads and all the stuff that eBay charges and shipping charges and stuff like that. To me, that's all irrelevant. I'm not looking at what the profit margin is for selling these or the percentage. The only reason I'm looking at the prices on eBay is to examine what people are willing to pay for that coin. Now, if the Silver Tiger that I bought for $30 is selling for $80 on eBay, what that means is someone's willing to pay $80 for that coin. it's irrelevant to that person how much of that money they give to me is a commission that eBay takes or anyone else takes or what the shipping cost is. The bottom line is that they're willing to pay that amount of money for that particular coin. Now, in another scenario or another exchange, such as I believe that Stella is setting up his own type of exchange where people can trade bullion and get around that type of commission structure that eBay and PayPal charge, then it's still going to be the same price because that's what that person is willing to pay. The seller's just going to take more of the money. So I think that's a fallacious argument that a lot of people have made, that the commissions on eBay are an argument against the price being what it is, because in my mind the price is just simply what someone is willing to pay for the coin. And the fact of the matter is that someone is willing to pay $80, $70, and $60 for a coin, and that's $45, $35, and $25 above spot. So I think I stand justified in my claim that the numismatic coins are worth the purchase because of the premium that they generate, even though they are more expensive when you purchase them. So I think that argument pretty much stands for itself. Now, another argument that people have made is that they have said that if I'm correct that this price drop and the prices that we're seeing in the metal are wholly controlled by paper traders, especially outsized positions on the COMEX, and as I demonstrated yesterday, outsized derivative positions documented by the BIS, whether those are on the LBMA or whether that's the SLV, whether that's the COMEX or the TOCOM. We don't know what all those derivatives are encompassing, but the point is this, that just because they have the ability to manipulate the price using paper contracts in the short term doesn't mean that they will win in the long run. Because for those of us who believe in free markets, and it would be those who are, I would say, in the von Mises or the free market school, would say that ultimately the market will win out. So, and that's of course the purpose of my channel, is to encourage people to accumulate physical silver, because obviously the larger number of people that accumulate physical silver, the faster this game is going to end. And it's just a matter of simple math. If you remember, the number that we cited yesterday was 1 billion ounces. We used that as a yearly number, and people can quibble about whether it's higher or lower, but if we just want to use a round number, it's 1 billion ounces. 1 billion ounces at this price is $35 billion. $35 billion is a drop in the bucket of the amount of money supply that's out there. Whether it be M1, M2, M3, or any one of the money measurements or shadow stat measurements you want to take, it is a pittance of the money supply that's out there. So all that it takes to break the paper manipulation is for enough people to take that paper money and convert it into physical silver. That will end the game. The game is not infinite. The game is not unbreakable. It's just a matter of people believing that the game can be ended, and it will be ended. Now, I personally believe, and I've covered in my Office series, that I believe that the billionaires, and well, I don't think there's any trillionaires, perhaps maybe the Rothschilds and other ancient families are perhaps trillionaires, but even if the billionaires, which we have an unbelievable number of in China, if they begin to try to participate in this physical market, then you're just going to see a situation where There's just not enough physical silver to go around. So I don't believe that this paper game can go on forever. I believe that ultimately the free market will win out, and they will be exposed for what they're doing, and the price of silver is going to skyrocket. Now, I think the longer that they suppress the price, the nature of the free market is that the longer a price is suppressed, the greater the shortage occurs, and therefore the greater the price explosion happens after that suppression is broken by the free market. So the last point I wanted to talk about, the critics has said, is talking about why is it that if they're selling to keep the price down, such as what's going on, in my opinion, in the paper markets, why is it that the percentage of paper to physical matters? And here's why the percentage of paper to physical matters. As you approach the point of infinite paper to physical, then that means that the amount of money available to either position is the determiner of price. So let's look at the silver market as if it was a normal futures market where you had hedgers, who are the producers of the commodity, and you had the consumers of the commodity, and you had speculators. In a normal market, you would see a roughly even amount of contracts bought and sold by hedgers and consumers, and then speculators on either side. Now, if the speculators, such as, let's say there were just silver speculators who were betting the price is going to go down versus speculators who are betting the price is going to go up, they'd be roughly matched unless there was some other factor, and they're all betting that they're right and they're going to try to win by playing their hand at the proper time. Now, that's not what you see with the shorts in silver. These are not speculators. These are not people that are betting the price is going to go down. These are people attempting to force the price down. And they're not trying to force the price down to make a profit, although they do that. They're trying to force the price down because they have other motives. They're actually backed by other parties that have a vested interest in seeing the price of silver down. So it's not fair to say that if everything were even, then it doesn't matter. There's buyers and sellers and the paper price is fair. That's true in a market where you have equal buyers and sellers and equal speculators. That's not what you have in silver. On the long side, you have speculators who are trying to make a profit because they know how undervalued silver is. And on the short side, you have a tremendous amount of backed bullion banks with an unlimited amount of cash who are not trying to speculate on making a profit on the decrease in the price of silver, but are actually trying to suppress the price of silver. So that's the distinction. It's not a normal market. It's a manipulated market, and of course that market's going to end. Now I want to segue into one of the reasons why I think we're seeing this price move right now, and that is the debate that's going on right now over the national debt. Now, there's a lot of talk about how the various administrations have, well, we have talk now about a balanced budget amendment. We have talk about what things the Democrats will have to agree to cut and what taxes the Republicans will have to agree to raise. But the first myth I wanted to dispatch is the myth that we have cut the deficits, or we've run a surplus. Okay, this chart, and this doesn't have actually the period from 2008 to 2012 is an estimate, but we know what the figures are. So if we go over to the other side, we know that we've actually exceeded 14 trillion. So these bars are going to be up in here rather than where they are down here. So, but that's fine because the estimate is just these last 5 years, but these actual figures are the real ones that we have. The first thing I want you to notice is that in no year, you can go year by year by year by year in this entire chart, there is no year where the national debt, the red is debt and the blue is GDP. There is not one year in this chart where the debt decreases. So if you hear someone tell you that such and such administration, and they love to talk about Clinton or other periods in time, such and such administration actually decreased the debt or ran a surplus, that's a lie. You can see from this chart, every single year that this has been tracked, the national debt has increased. The national debt is around $14 trillion right now. Now, the debate that we're hearing between the Republicans and the Democrats is just absolutely absurd. Let me give you some analogies. Imagine if you had an alcoholic or a gambling addict and they were coming to dire straits, whether it's the end of the road for the amount of money the gambler can have or it's health concerns for the alcoholic, but what they're facing is a complete collapse of their way of life. And then what you get is some type of bargaining. So what they tell you is, well, I'm going to stop drinking or I'm going to stop gambling, but before I do that, you have to agree to increase my allowance of debt or my allowance of alcohol so that I can cut down in the future. That's the debate you're hearing right now, and it's utterly absurd. There's no reason to try to pass a balanced budget amendment. All they need to do is just not raise the debt ceiling and force them to cut whatever amount of money is required to be cut, wherever they want to cut it, whether it means closing all those 150 military bases around the world, whether it means ending the ridiculous war on drugs, whether it means ending the ridiculous farm subsidies, or all of the ridiculous amounts of money that Washington wastes. The answer is to deal with the issue now. So my point is this: these people are completely disingenuous. Their proposal is to reduce the debt in the future, but they proposed this all the way through all these years. If you've been around as long as I have, you've heard them sing these same songs all the way up this slope. Well, we've got a balanced budget amendment. We're going to pass this. We're going to do this. We're going to do that. But they never reduce the amount of money they're spending. So the best thing it could possibly do is to leave the debt cap in place and simply cut what it takes to stay below it. That's what you would have to do if it was your personal budget. That's what you would have to do if you were a gambling addict that had reached the end of their rope. That's what you'd have to do if you were an alcoholic. You'd have to quit cold turkey. So all this stuff is disingenuous. They have no intention of reducing the deficit. They have no intention of paying down the debt. They're going to hyperinflate their way out of this situation, and the silver market knows it. The gold market knows it, and the currencies, they all know it. And it's just a matter of this thing playing out and them playing their games. They're going to play some political games, and they're going to trade some concessions for others. They're going to raise the debt ceiling. They're going to spend more money. They're going to raise taxes, and they're going to spend more of those taxes and dig a deeper hole until the currency completely collapses and gold and silver explode to the moon. and we'll talk to you next time.